going on to the AMC stock family? In today's video, we have yet another good one, and don't worry, it is about a market crash, but not in the way you might think it be. It is not related to AMC's market crash, but rather how AMC is going to make the market crash, and AMC stock will probably be the only equity, along with GameStop, that ends up having an insane skyrocket to the upside. Let's talk all about that. So we see over here that how GameStop and AMC stock could be a market hedge. Basically, for those of you guys that do not know, a hedge is just simply an equity that you end up using when the market ends up turning against you. It is also going to be used with inverse correlations, and we'll talk more about correlations in just a few minutes. Now, corrections are a feature, not a flaw, of the markets. Today, Wall Street Meme discusses how AMC and GameStop could potentially be used as a hedge against market weakness. Market weakness right here. Let me know in the comments section below how many people you know right now that are talking about potential market crash. And every time you hear them say that the market is going to crash, you guys probably get worried. Remember what happened in late February? A lot of stocks end up crashing, but AMC was actually one of the only ones, along with GameStop, that ended up going to $72 a share, whereas GameStop went to $500 a share. And this article also mentions that with the world and the economy currently recovering from what has been going on, the robust stock market of the past 15 months has fueled fears over a potential speculative bubble. When will stocks finally lose their steam? Hedging against such a risk, or at least being prepared for a pullback, is generally a good idea. Today, Wall Street Memes explores an unorthodox hedging approach that involves GameStop and AMC. This is a new hedging approach never done before because no one has ever thought about doing it before. Let's understand beta. Beta is a coefficient, or in other words, the number in front of a variable, or any condition that we have, that measures the price behavior of a security relative to the overall market. In other words, it is a historical indicator of how much an equity's value will likely rise or fall, given the market's performance. Beta equal to 1.0, okay, and so here's where it gets extremely important. So again, beta equal to 1 or 1.0 means that the security is tightly associated with the market, and that it should climb or fall 10% give or take. For example, the other likely will as well. Beta above 1 means above market volatility, while beta below 0 suggests an inverse correlation with the market. We have been talking about inverse correlations for a long time, and now finally, these articles, they're starting to catch up. AMC, for the most part, does have an inverse correlation alongside GameStop, because when the market decides to go up, that is when AMC sometimes goes down, or at least that was a trend in August. All throughout the middle of August, while all these blue chip stocks are going up, AMC was stuck in a box until the last few weeks of August when it decided to break out of its box. And let's continue reading before we have any further discussion. So negative beta equities have one benefit. They can serve as a portfolio hedge by often zigging when the market is zagging. In other words, they will go up when the market goes down, so that'll benefit you, or vice versa. It honestly depends. Are you guys going to have a long position where you are betting that your equity is going to go up in share price? Or are you going to have the opposite approach and do think that your equity is going to end up going down, which you can still benefit when the price of your underlying equity or stock goes down? A lot of hedge funds do that as well. However, with AMC stock, that is not my approach to the stock. With all this due diligence that we've been understanding, it's just way too risky to go against the AMC stock movement. And also, why would anyone want to go against the AMC stock movement in the first place? This article says that. However, within the stock market, it is very rare to find shares with negative beta. So negative beta, this is extremely important as well. In the beginning of the video, I talked about these correlations and I talked about the beta. Now here's where it gets important. With negative beta, it's extremely rare to find these type of underlying equities. However, there are some instances and times where they are found. And which two stocks just got found in the beginning of 2021 that have this negative beta? It is GameStop and AMC. And at times, gold miners can be an exception. Outside stocks, treasuries are often inversely correlated with equities. This is also true. Many people do buy gold. They do buy outside stocks like treasuries and sometimes even bonds. Now here's where it gets even more interesting. GameStop and AMC stock beta. GameStop, otherwise known as ticker symbol GME, has a negative beta of negative 6.8 according to Infront. Roughly speaking, the negative coefficient generally means that the stock often moves opposite of the general market trend. See below the comparison of GameStop's beta with the main segment peers. This is the due diligence that we need right now, because I'm sure all of us, we know that AMC stock right now in after hours is at around $48 per share. And so we all want to know, is it going to go higher? We'll take a look at this. This is GameStop and we'll get into AMC in just a few seconds. So the market cap of GameStop, 15.743 at the time of this. And also, let's take a look at Best Buy. All these market caps are much higher. However, that is not the significance of this chart. We need to be looking at the beta. So GameStop has a negative 6.8 beta with a year-to-date change of 985.5%, whereas Best Buy has a 1.14 beta. This is positive. And Amazon has a 1.13 beta. This is also positive. they have a year-to-date change of 17.7% and 2.8% respectively. And also we have even more. We have Advanced Auto Parts. This is a 0.93 beta, and this is also positive, and this one has a change of almost 30% year-to-date. And notice that the closer we get to a negative beta, the more year-to-date percent change that we have to the upside. Now let's talk about AMC. So AMC also has a negative beta of 4.2, and the table below shows that this is a feature of AMC specifically, probably due to its meme status and the unique forces that move the share price, and not at all something that is shared across the entertainment sector. Meaning that Roku, Netflix, everyone that AMC is currently competing against, they do not have this. So let's go ahead and talk about the chart now. AMC Entertainment with a negative 4.16 beta, whereas its competitors, Cinemark Holdings, 1.73 positive. We also have Cineworld Group, 1.17 positive. They have a 4.1% change and a negative 1.3% change, whereas AMC, get this AMC stock family, they have a 1,826.4% change. And also notice about this market cap, this is also extremely important. This is also something we've been emphasizing on this channel. The market cap of AMC will change the more that the share price decides to increase over time. And this number is important because we were at $20.812 billion in market cap. I believe that we are closer to $30 billion for the market cap than we are to $20 billion for the market cap. And if the stock market does decide to crash, pay attention to this number because this number will go up even higher. That's why the $20.812 billion, it's really important right now because that's what ended up happening just a few weeks ago. And so now we are almost at $30 billion in market cap. What is going to happen next? We need to watch out for this number because this will give us a good idea of where AMC stock is at right now. And we can also compare this to what the AMC balance sheet is. And so GameStop and AMC as a hedge, it is reasonable to expect that in a market correction scenario caused by macroeconomic factors, investors would seek alternate forms of investment. In the case of AMC and GameStop though, price action has been largely determined by supply and demand dynamics, not so much by business fundamentals. So we were just talking about to watch out for the AMC market cap and whether this number increases or decreases. And the only reason for doing that is because some investors, and I'm already expecting it, they're going to start pointing to this market cap and trying to injustify the AMC price by saying that the market cap is too high because it does not parallel with the balance sheet. A lot of investors have already done this, and if there is a stock market crash and AMC goes up in share price with the market cap as well, because both of them have a parallel correlation, then I'm guessing that even more investors in the future will start trying to injustify AMC yet again, and they'll create negative catalysts and negative news. That's why we need to watch out for this number, as I mentioned just a few seconds ago. Now continuing on, this has been extremely insightful and helpful. So this has been determined by supply and demand dynamics, not so much by business fundamentals, but as I just said, some investors, I'm already predicting and I'm already expecting that many will try to injustify the AMC price as the AMC decides to go higher, which I'm a believer that AMC will go up in share price, if not today, if not tomorrow, if not next week. Inevitably it will, because we buy and hold, we do this for the movement, and not only that, we also have conviction to hold one of our favorite equities right now, because in my opinion, this has been one of the most significant reopening stocks of 2021. Why not park some money into these two stocks when the market and the economy weaken? Investing in AMC and GameStop might be one way to ride positive ape sentiment and sidestep a fundamentals-driven market pullback. Of course, putting money in meme stocks brings its own set of risks, but being exposed to a broad market bearishness might not be one of them. This author, I believe he is on our side. He is saying that when you are too bearish, that is not the best either, but being exposed to broad market bearishness might not be one of them. He is saying to have a hedge, and there's nothing wrong with having AMC and GameStop as your market hedge in case of a stock market pullback, because these two stocks have historically done well when the entire general market has not. If we take a look here, I'm just going to quickly pull up the Apple chart, simply because right over here in today, they had an insane rejection. Now, why is this even relevant to AMC? The reason why this is relevant is because now the blue chip stocks, they are starting to slow down. In August, they were the ones that were ramping up. In August of 2021, we were talking all about how that is a time for the blue chip stocks. They'll be the ones that increase in share price. AMC and the others, they will remain relatively stagnant. And so over here in August, this was around the time that Apple broke out of one of its major resistance levels. And so this resistance level was at 150. Now Apple's at 154. But it actually used to be at 157, almost 160. And so this is where Apple starts to get rejected by some of these even higher resistance levels. Whereas AMC stock on the day, AMC stock has no problem. So AMC, if you go right over here, AMC Entertainment, they have no problem whatsoever. They actually continuously decide to increase without any stoppage, or relatively little stoppage. It is now or never before this equity decides to have a breakout of $48 a share. I know we are above $48 a share right now, but if you remember, we were talking a lot about wicks. Wick 1, Wick 2, Wick 3, Wick 4. We are still in this wick zone. we need a full candle breakout above the $48 share range, and that will indicate there are no more wicks and there will be no worry of whether there will be enough people to sustain the highs of the candle, which is what we have right now as we speak. And this was especially relevant around August 24th and August 25th. There were just simply not enough people to hold the stock. Otherwise, the stock would have already been above $48 a share. But as we get closer and as time goes on, this price decides to have another consolidation zone, and that is when we get closer and closer to that breakout, allowing us to finally go back above $48 a share. Now with that being said, AMC stock family, thanks again for watching. I'll see you guys next video.